We're glad to have you back on the program, Macro Strategy Global Head. Looking at your latest notes, and I mentioned the sort of the coronavirus data, I would almost say that Johns Hopkins data is the new jobs number in a certain way, if you know what I mean. For me, anyway, looking at this data, what are you looking at most closely to try to figure out what is probably almost an impossible situation to figure out?
Thank you. So as you mentioned, I think the virus data is now key. I mean, when it comes to economic, in normal times they are very important, but right now the economy was basically closed. It was closed. So we know that these data are going to be abysmal. So the question is, can they jumpstart one when the virus subsides and when we open the economy? And for that, you need to know when will you be able to do that. And for that, you look at the virus data, not the sort of claims data or retail sales. We know that they're to zero if people are locked in their homes by the order of government. So virus data, we started looking at a sort of big data, especially smart thermometers. About 4 weeks ago, there's a provider of smart thermometers called Kinsa, and they're basically publishing daily, which is pretty much a real-time influenza-like symptoms across the U.S. So we look at the data first. We saw very early on that disease is spreading, and as soon as the measures for social distancing were announced, these typical influenza illnesses started dropping very, very quickly, and so we could model daily increase, we could model daily decrease, we could model recovery, of people, so mild cases about 2 weeks, serious cases 3 to 5 weeks, and we saw sort of early on that this is better, and obviously you want to market yourself with the, New York State press conferences in the morning, late morning, you want to basically see net hospitalization. You want to see sort of, a few other data points, obviously fatalities, and which do lag, and also intubation. So our model is basically tracking to New York State data, and we were already 2 weeks ago. We said Apex is going to happen a week ago, and we are getting actually now. And when I say Apex, that's basically net hospitalization growth inflection. I know it sounds a little bit convoluted, but that's basically when you stop accelerating pressure on a hospital and start decelerating. That happened already about 7-8 days ago.
But Marko, I'm fascinated. Sure. Marko, I'm sorry to jump in. I'm fascinated by all this stuff, but I need to tie it back to what we do here. What does it mean for the market, the stock market? Okay. Tie that to equities, the economy.
Exactly. So that means that we think it's going to be possible to reopen it sooner. We think within a week from now, you will start seeing some limited moves. A little bit like what you're seeing today in Germany, announcement for Monday. We think we're not too far behind. We think we're weak. It's a week away from it. It's going to be limited. I'm talking baby steps, but that tells us that sort of by the summertime, we may more substantially recover. And sometimes next year, maybe in the second half of next year, economy reaches a high watermark, which means that the market could reach a high watermark in the first half of the next year. So that's basically the timeline that we expect.